Best people, yes, how are you? Delighted to be back at you, able to upload again. And we're going to be talking about gold today. We're going to be talking about Japan, the Japanese yen, the debt situation, why that is the great trade that you've forgotten about that you're not putting on, gold and the yen, which is where we'll start in actual fact. Let's get straight into the technicals. Don't forget, hit that like button and subscribe. What are we talking about? Well, a key level, 300,000 yen has been surpassed. So many of you are focused on the 2000 mark on the gold dollar, and we will be going past the traditional gold dollar chart, which most people are viewing. But a dollar is part of the story to a large degree as well. And I did a bit of highlighting the degree to which gold is already doing its job exactly as it's supposed to in a proliferation time, and that is by moving up against most of the global major currencies as well as the emerging market currencies. So what you're seeing here after, and in fact, with the yen, we take a step back. We were really bullish quite an extended period ago. This is around about 19 era. This was a key triggering event around about the 140s. You could have got 140,000. You could have got an ounce of gold, 140,000 yen, and since then we said this is going to go up and away, and you actually had another setup. Let's draw them in actual fact so that you can see them, and again and again and again, and now you are in an absolute melt up. Of course, this is yen weakness driven, and we're going to talk more about the debt because actually Bank of Japan said recently they are prepared to let their 10-year go through the 1%. This is after we said, where we see a 1.6% target. That was when it was still sub 0.75. Today it's 0.93 on the 10-year. So what is actually happening there is their currency is getting so battered, and it's becoming such a clear and obvious one-way trade at the moment, that they need to get some strength on it, and to do that they have to allow the debt to devalue to take some of the pressure off the currency being the only release valve of devaluation on that debt, because the debt is a certain amount of yen. You either let the yen devalue or you let the devaluation of the amount of yen devalue on that debt parcel. So it's either the amount goes down or the currency goes down. At the moment, by standing on yield curve control, which they've been slowly trying to walk away from, they are the big game. Everybody suddenly realized, and we've been saying, as we've said many times before, on the debt front, that the debt ended March 2020. The bull market debt ended. It is a totally different game. And you have one nation state sitting where their tenure is still sub 1% at about, we'll go take a look at it now rather than guess, 0.8s, 0.9s, and you've got other nation states paying 5. Well, guess what happens? Money, macro, can search and stay in whatever currency it likes and earn interest. And as a result, it leaves the yen and goes into a dollar where the Fed has been front running, and you're getting some dollar dominance and you get yield. You get 5.5%, whilst in the Japan, you don't even get a single percent. As a result, lots of pressure on the yen as a currency. But just let's have a look at this and enjoy this for what it is. This is a major belt hold day candle that is absolutely smashing it through the yen. And you are still in this broadening structure of this original squeezy Japanesey, very aptly named, but in my opinion, that occurred and set up some time ago, right the way through 2019. We gave this trade. We were discussing this many years ago, in terms of how we expected to see the yen perform relative to gold. Boy, oh boy, what a mover. So in essence, you've got literally that. 2x, which is huge. Remember, this is currencies. This is not cryptos. This is currencies. You're talking about a halvening in the value of buying power of the yen currency relative to gold. So gold doing its job absolutely there. And when you look on the smaller time frames, it just looks like it's gaining that earlier momentum. So this is how you should be viewing the 2000 mark on the dollar. Will it be single-minded? Will it only go up? No, but this is typically how you overcome key levels of significance. Initially, they serve as bulking points, then they serve as resistance points, then you go above them and over them, your iceberg over them a little bit, then you pull back. So there's only small little pockets that have gone above it. That's kind of where we are with the US dollar, the 2000 mark. Then you get above it and you start playing either side of the line a lot more for a lot longer. There's much more hang time. Then you get above it and now it becomes support, and then you leave that level and you're searching for new levels. Those are the processes you go through when you are completing a key level of significance domination. And the reason I'm showing you the 300,000 is exactly this. This is what you should expect to see as proceeds that will occur on the dollar version of the gold price, which we'll pivot to now. Why don't we go there straight away? So going through over to the dollar, and in fact, let's take that one instead. You will see there is the 2000, again a push above and then it dovetails below, but there is no major capitulation this time. There is not the running scared that, oh my god, we've reached to a new limit high, etc., etc. This is steady buying along these wicks all the way along, and you've been taken through the 2000 and then you're having a mild technical rest. So this is much more typical of what we would expect for something that is building a real base camp quite high up the mountain, and is not backing off and is looking to mount the summit in terms of gold's general progress against the dollar as a whole. Note this flag, this channel break that we highlighted on the bigger time frame. So we're going the opposite way now. We're starting on the smaller time frames and taking you up. That was a seminal moment. Now, okay, we're done with this pullback and now we are coming back above, and I'm expecting a bigger period than what you got here as your spell above the line, and eventually, as I say, we'll get accustomed to hanging out at this level for far longer, a little bit above, a little bit below, and then we will leave it. It will serve as support and then it will be left, and that'll mean market moves to the upside for gold. Don't forget, however, that you have come from quite a low point, 1800 and around about 10. I would estimate the lows, maybe a bit under, right the way through. So there's already been quite a strong move. So the fact that you don't immediately march to 2,100, 223, give it some time, allow for a bit of chop and churn, but when it happens, it will happen with momentum. So gold is looking super, super strong, and at the moment, it's still largely the leader, the gold-silver ratio. As a whole, we're looking continually for this challenge on the red dotted line, the basing ascending grind line that we've drawn here for you. You've got away. We were playing with a line. We felt this could be a key moment coming, and it didn't come. It leaked out the other way. So we've been saying, yeah, look, are we about to let go? Are we about to let go? We've been dancing on this grind line, this basing ascending grind line for an extended period. And in the end, you leaked away. We kind of pulled away from the breakout moment. But at some point, that too will see further downside over here, and you will see the likes of the fatal attraction for this basing descending grind line, ascending grind line, let me say, will come back into favor. However, first the God market runs. So it's even possible, if you have a sudden violent surge on gold, that you could actually stretch the gold silver ratio a tiny bit more to the upside before any of that takes place. But I'd question whether they're going to find it easy to get back above that secondary localized high or that localized high again. So I think most of the playroom is going to be in this ever decreasing wedge of space. So let's just use a different color. This is the wedge of space that it finds itself in, somewhere above the basing ascending grind line, and yet probably below here, but I would say almost certainly below there. So it's running out of playroom, and it's going to keep getting squeezed tighter by that basing ascending grind line, which keeps coming up under it until such time as we surrender and we have a violent move to the downside. Don't forget your solar panels and all the other fundamentals for why silver is being utilized on ever greater level as well. So this is gold generally. Let's go back to the currency of the Japanese yen. So I'm interweaving them. You've almost got a situation where you've got the strongest currency, gold, it isn't a currency, it's real money. The others are currencies, and they're one of the weakest of the major tier ones. So we're not talking about emerging currencies, we're not talking about the Turkish lira, the South African rand. We're talking about a first world nation states. Their trains run on time, things work, the power is on in Japan, etc., etc., etc. Demographics, terrible inverted pyramid. Largely their own citizens have been supporting their own debt Ponzi scheme, and now what you're facing is they have to devalue that debt in number of yen. If you want to hold it at the same value, you have to devalue just the currency. That's where they started with their yield curve control. Now they realize they've got to get, the pressure's never going to go away. People are going to keep coming back and leaning on their currency. It's simple as that. You can borrow at cheap money and you can deposit it somewhere else with currency appreciation and a yield. The leverage will be forcing that to change. So what ends up happening is now they're having to let the rates bleed out. But even though the trend change could see a period of yen, I don't want to say strength, but pushing against counter trend price behavior, long run, as long as there is a marked differential and there's a reasonable degree of liquidity, which there is as a big nation, between it and say the dollar, you're going to get a continual ongoing squeeze into dollars. I will exchange yen for dollars right now. I'd prefer to have the gold ounces out of all of them, but in a world of where you're holding currencies, almost certainly I would have the liquidity of the dollar, I would have the yield of the dollar, and I would have it, I would get out of the yen. And so it moves in terms of first world nation states in that direction. So the trades that we've discussed, even for those that say don't have the same optimism about precious metals as we do, if you're an FX trader, for example, even the euro, and the Europe, everybody's pretty familiar with the flawed nature of the euro, but even the euro for us has a very powerful structure of potential positivity against the yen. And we've had in our community this as an upside trade for an extended period. We've even called all the way, and this is since the break. This has been one we've referred to and discussed quite a bit. And it's, for many people, it's very hard to put a euro long on. But this particular structure is absolutely clean, especially for FX markets. And as I say, we even extend it with that bigger impulse over there that will potentially give a 227. But just taking what we'd call the fractal of this pattern here, the double line portion of it, you're at 168 and you're breaking at 127. And since then you have marched quite consistently. This is using as your strong currency the flawed euro. You have marched consistently. You've got the pattern there with the euro. You've marched consistently towards that 168 target, and you are actually now in the 160s. Now, if I'd said to you when it was at 125 and yet to break the 127 that you're going to 168, most people would have balked at it. Now you will have seen that literally since 21, it's a 2-year trade, and you will get that uptick. By the way, it also should have been a positive carry trade for you, because the euro, despite being a lower rate than the US generally, is still higher than paying higher yield than the yen. So the yen short trade is the FX trade that nobody has on that absolutely should have on. The yen currency short trade is the FX trade that all of you are looking in the mouth. You're talking about a structural debt related problem that's going to take ages to unwind. They can't just let their yields go to 5.5%. The politicians will be thrown out. All their grannies' bond holdings in terms of valuations would be deflated violently. They've got terrible demographics. It has to be a consistent trend of devaluation in the currency, and they still need to let those yields walk out to approach the similar level of yields that are in the rest of the first world, just to be treading water in a generally failing pool of general currencies, that just gets them to the point where they are no worse than the likes of the euro and others. That doesn't make them strong. Again, this all highlights gold. This all highlights gold. Gold represents the amount of energy it takes to dig massive amounts of holes in the ground, get lots of people with sophisticated equipment to get a very unique and rare metal out of the ground, refined and in a concentrated format in your hand. That represents work done, real energy work done, and you have something that is truly scarce and unique for it. And as a result, gold is the best out of all of them. So it doesn't matter. We've done on other channels, as I've said. I think it was even this one. We did it. It didn't get released on the Market Sniper. So just to highlight super quickly again the role that gold is indeed playing across all currencies. I'm going to run the gauntlet of the currencies and the gold's position relative to them on every single one. So let's just go to the gold euro. I'm going to leave it on the monthly, clean our face a little bit here. This was actually the structural big long call that took us right the way through, including the events of March 2020. You can see the little dip and return. This was all being a breakout HVF to the upside that made that target and continues higher. Right now, on the euro, which I've just highlighted to you, is a stronger currency than the yen and is actually in an upside move against the yen. Gold has never been on a monthly. If the month is to end, by the way, 31st of October, the month is due to end very, very shortly. That particular candle right there is going to be the highest monthly close for gold against the euro. So you're talking about 1875 being the highest monthly close. We are on the monthly chart here, good people, and metals is doing exactly what it should be doing. There it is, 1875. 1875, highest monthly close for the euro. Well, how does that look in pounds? Oh, very similar chart. I can leave the same blue lines in perfectly, and you guessed it, 1640, currently the highest monthly close. Gold is closing across, this is the headline you absolutely won't see in any of your mainstream media. Please hear this, because I'm the guy who's going to tell you the stuff you should be realizing that they don't want to tell you. The last thing they want is citizens to realize that the strongest money that they can own is physical gold. It's the last thing they want you to realize. The last thing is they want all of retail to start demanding gold. It's the last thing. But I'm going to tell you that against the euro, you're at the highest monthly close ever this October, right here in 2023, sitting on the 31st of October, looking you in the eyes and saying, against the pound and against the euro, you are closing at an all-time high. This line inverted, just to make this very clear, there's a nice, where's it, invert scale. That is the loss of value of your pound to a single gold ounce. Right there, that's what your pound is doing. British people, European people, this is your pound, this is your euro. And we're just started. We're going to run the gauntlet of the whole list. This is the rate at which your currency is devaluing. Gold ounce never changes. It is endemically the same consistency, the same weight, the same everything, the same protons, neutrons, and little old electrons in there. That thing is the plane that flies at the same altitude. That is your British jumper that has jumped out the plane on his rate of descent. That is the devaluation of your pound. For the Europeans, that is the devaluation, seeing as I've chosen to reflect the currency, because this is actually the gold that is staying the same, that it's the currency that is devaluing. Europeans, this is your devaluation. The only thing I haven't done is that the green candles are actually should be red ones and the red ones should be green. So you're at the low, making a new low in loss of value on your euro. Okay, let's go to that Japanese yen chart again. Oh my God, the Japanese, dear Japanese people, this is what's happening to your currency. Dear Japanese people of a sophisticated, beautiful culture, this is what's happening to your currency, my friends. Dear Japanese people, you are smashing it to the downside right now through the 300,000 level. Your currency is being obliterated. In fact, I have a template which is less confusing, which I call the inversions template for looking at inverted charts, and I'm going to switch to that so that you can actually see things in the color that they should be in. So if we go gold, Japanese yen, and we go and show our beloved Japanese people, this is your chart. This is the share price of your country and what they are doing. Inflation is central bankers' policy. It is policy by design. It is designed to impoverish you, to keep you running on a treadmill, to give them the executive privilege of creating money for their expansion into wars and other mechanisms that they get to be wealthy, living off you, doing productive work, adding value for others, whilst they live off you running the various scams that they do. You only have to look at America deciding whether they do one massive boondoggle for Taiwan, Ukraine, or Israel, or whether they do independent special aid policies for the likes of Israel so that they can further complete the genocide that they are perpetuating. Then you get the gold versus the Australian dollar. Dear Australians, we have many Australians in our community and many Australian gold bugs. This is the performance of your Aussie dollar to gold. This is how it's going. This is your buying power to gold right now. And by the way, this is, we've got to go back to this on a monthly chart, by the way, because we're talking, it's the 31st. Let's just get this properly straight. I don't want to make this look better than it truly is. I need you to see the utter misery that your currency represents in all its forms. This is your currency. Right now, guys, in the monthly chart, for Australians watching this right now, your currency has never been lower valued to that symbol of utter consistency throughout the dawn of time and ages, gold. It has never been more devalued. 3,140. It is a new record low close for your currency against that precious metal's little ounce. That is a fact. It's a fact like a cow. No central banker is going to tell you about it, how they're demeaning you, diminishing you, killing your currency. But this is how it looks. If you ever think you're pulling out of this dive, I've got a bridge to sell you in San Francisco. That is the gold against odd. Dear Canadian people, we have lots of Canadians in our community as well. Right now, your fiat currency, right now, on the 31st of October, last day of this month, has never looked worse. Has never looked worse. You are absolutely being peed on. The inflation policies of your central banking cartel are destroying currency. They're printing it up, creating new of it. They are diluting you. They're making everything cost more. They're dragging you into higher tax brackets. At every level, this is squeezing you. It's a Ponzi game that is final stage. This is how they destroy you. You are closing at a monthly worst on your fiat paper versus gold. 2,766 Canadian dollars to secure one single little poxy, very small ounce of gold. That's right, of pure real stuff, the beacon of consistency. Dear South Africans, you are next. This is where you're at. You've only been surpassed because you've fallen even further, even faster during May. You've only been surpassed by one other month before this, where you closed at 38,762 rands. This will be the second worst month that you've had in a series of absolute throwdowns and rallies that sees a higher degree of volatility, but an absolutely assured greater extent of overall fall and proliferation on your national currency. To the Chinese viewers, let me show you this. CNY, this is how your monthly currency looks against the single, consistent, never changing ounce that is always pure, that always retains the same properties and represents the plane flying at the same altitude. Your Chinese parachutist has absolutely thrown it down, and you are now making a monthly low in valuation against that beacon of consistency, 1 ounce of gold. You are 14 14,628 yuan. 14,628 yuan. You have never been that low. You are setting a new record of low in a journey that is generally all about you largely going down generally. So there you are in the October month of 2023. The Swiss franc is one of the rare exceptions, but not to be for too long. You are currently trading, if you are Swiss, at the second lowest, only beaten by recently all of these. In the instance of the Swiss franc and the South African rand, there were only recent lower lows that have occurred. That was in 2022, round about May, if I remember correctly, for those two. You have not traded lower. You have not traded lower. Everything else is above this. Everything else, that closed there. This, of course, closed up top here. So that never closed there. That closed up top there. That is clearly there. You are now trading lower. It is the second lowest ever. And the direction is down. And the likelihood is in the months to follow, you will be making, like everybody else, a brand new low in your fiat currencies situation as you squeezing to the downside and selling off at 1804. Dear Turkish people, this is the market sniper talking to you. As you know, your currency is one of the most special for fiat devaluation. In spite of this ridiculous wick, which is clearly a data error, I would like to tell you that in actual fact, you are closing at 56,591 Turkish lira to an ounce. That paper is not worth the paper it's written on. It will be 100,000, it will be whatever it will be, but this is a trajectory that only goes down. You should be holding gold. You should be holding gold. Culturally investing in gold, the Indians, the best cultural investment you've ever made is, of course, in gold, as your currency sits at an all-time low. Look at that in rupees. By the way, 394, wow, 553. So I've got to say, I can't even say this number. It is so many digits. I have to go 1, 2, 3. That's 1,000, 4, 5, 6, 7, 8. Wow, 8. 31 million. You are through 31 million, hitting 32 million Indonesian rupiah. Sorry, that's Indonesian rupiah. I said India, and I clicked on the Indonesian rupiah. I thought that was a bit much. We'll get the Indian rupee next. You are at 31 million, and you are heading down. So one of the most demographically dense nations, Indonesia. The only investment you can do. So it goes on. Let's actually get the Indian rupee. Let's see if I can get that actually. Because we did the Indonesian rupiah but not the Indian, while we were talking about the culture of Indians too. Indian rupee. So it doesn't change the story. The Indian rupee, here we go. We can take that off. New monthly low in your fiat paper currency, the rupee. 166,394 rupee to get a single ounce of gold. I would take all of that paper and all of those crappy digits that they're going to keep manufacturing, which are absolute fake Ponzi. They can conjure them up in a computer entry, borrow, create loans for whomever, whatever, and many of it will never get paid off. If you hold the gold, you own the gold. Someone with a gun has to come and take it off you. They have to know you have it. This is an all-time low. To our Indian friends, the ones that invested in gold, it's been your best investment. Look at all these other closes all over here and above. You are making a new low. So I mean, I'm hammering this home intentionally so that you actually can run the gauntlet on this and see it with me, that there is no good fiat currency. There is no good fiat. Of course, the Swiss franc is better than the Turkish lira, etc., for now, for long. But they are all currencies. The only one that is money is gold. And eventually, we will start to see this follow through into silver as well. So there you have it, guys. That's what gold has done for us so far this year, in the year of October. Let's just get that back in place. That's what's happening on the yen. That's why you need to be short something against the yen, even against another flawed currency, as I've shown you, against the euro, which has enough problems against it. But if you can trade the gold against the Japanese yen, that is almost probably the best trade in the business so far, and it is a runaway trade. Does that mean you enter it right now? Well, look, eventually you could get a bit of a pullback on the yen if they do start letting the interest rates. So we predicted, we said we would do the debt on the yen, so let's do that. We've called for 1.6 on the Japanese debt situation, and we want Japan JP 30-year. So this has been for us a reversal that has been in play for quite some time, and we've called for the 10-year as well. Let's just get the 10-year up as well. JP 10. This one we've actually done the TA on, and it is absolutely ripping. I mean, it's spoiling the fact that we said 1.6, because when I said 1.6, it was actually only just around here, 0.5s. It was only at the 0.5s. It's at 0.953. We're looking for 1.6. You will overshoot. You will overshoot. The yen debt short, the debt of Japan, to short the debt of Japan is the fail-safe trade. It is almost the fail-safe trade. There's way too much of it. The demographics are inverted. They're going to have to ride it off. And in the meantime, while their rates are substantially lower than the rest of the world, their currency has to get clobbered. The FX trade, the 2-year FX trade you are failing to have on right now, and I'm talking as much to myself as anybody else, is your yen short trade. If you are not short yen, you don't like free money. It's as simple as that. And this rate spike at 1.6, we're going to put it on a log scale for you. No, it better not. This is the beginning of major moves that have to happen in a completely structurally spoiled debt-based system in Japan. And you know, take it from me. It's been our call. We were the first to make it. We made it when everyone else was saying there was no trades to be had. And it's like, to me, we said, I feel stupid. I feel stupid that I think this is a slam dunk. I must be stupid. I'm missing something that the great minds of the likes of Soros's ex-partner, what's his name again? Someone in the comments, they were saying it's the most difficult market to call. There's no trades that he can see that he wants to care to discuss, our friend. He's, of course, into the climate change funding and everything else. And I'm like, but surely the yen, but surely the Japanese debt markets. And we've also called for the Nikkei yen hedge stocks that sell repeatedly across all of the world, that have real market share, that are going to get cost input benefits and earn the other fiats that are less crap than theirs, such as the likes of Honda, Suzuki, etc. These are car makers, for Fujitsu and a number of others, that we've said the Nikkei will stand to have a major run. It has slowed down obviously a little bit at the moment after triggering its 30,000 key level, but we have called for that Nikkei as part and parcel of this great debt devaluation. The equities will go up because they, particularly the exporters, will truly have a huge benefit. 57,000 on the yen, and it will surpass the previous highs. We've done this chart some time ago. We've had a real head and shoulder reversal here, left shoulder hedge, etc. There's real trades. This high that is at 39,000 will be surpassed, and you will run to 57 at minimum in our view, and it will be driven by great companies that sell loads of goods in other currencies. It's simple. It's like a rand hedge. It's a yen hedge. The tier 1 nation yen is losing ground across the world because of the fact that it got overpassed. Go watch our Professor Werner interview about how the Fed and the controlled America via the city of London contacted the Japanese because they were selling too many goods, running too good and too massive a deficit with America was running too big a deficit with them, and they got explained to them that they have a clear savings problem and that they need a nice boom of sorts where everybody can have a little bit of a property boom and go way over the top, and it's time they created some debt. That of course occurred successfully. They were bullied into it, and as a result, this is where you find yourself. This is where you find yourself. The damage was exported to the yen. The lenders, the excessive lending, the same mercantilist variety that are busy committing genocide, ensured that the same extraction policies force and destroy a culture by populating either drugs, porn, or extreme tertiary lending, eventually created such a boom that generated this 40-run high, by the way, and then such a death for decades that now, finally, as that debt is being devalued and that currency is devalued, that stock market will in fact move beyond. By the way, if you want to know what the key macro trades in and how, you can feel free to book a call, chat with members of our community, and see if you too would like to build your wealth during this period in this crazy financial reset times. The traditional advice is not the advice that will serve you during reset. Safety was always bonds and debt markets. It is safe no more. It is guaranteed death. Slow and then suddenly very fast. And how do you position for this? What should you do? Be amongst a community of wise that are working their way to wealth building through reset times. Until I catch you a little bit later, gold is doing what it's doing, especially running the 300,000 against the yen, but I showed you against all the other currencies. We expect it to run the 2000 and build a real base there and then eventually leave that. We continue to maintain that the next major staging point will be at the 2.9 level as it approaches 3000 as part of a technical target. It's not a number we just sucked out of our thumb. It is technically validated like all of our targets that we talk about. And eventually, of course, silver will join in as part and parcel of that, as yet not really seeing it fully to the fullest, but wait till gold really starts pressing forward. Okay, until next time, I look forward to you. Glad to be back and able to upload again. Too much truth talking about drug companies that actually admitted doing things that were causing terrible health conditions. Obviously not allowed, obviously was misinformation, even though they said so themselves. Anyway, forgive us for that. We'll always try to be honest, but we'll have to watch in what ways we're honest. Give us a share and a like. The algorithm almost certainly will see us as an adverse channel. We need your help to grow. Any comment is a good comment, and a thumbs up is certainly very helpful. Thank you for watching, and I'll catch you again soon. Bye for now.